Hey, hello traders, welcome back to my channel. In today's video, I'm going to be sharing another exciting strategy with this indicator which we have on the chart. And this indicator is something very straightforward and very simple and easy to use. This is a scalping strategy, so in case you can use this also for swing trading, but on this strategy which you are discussing today is going to be for scalping process, so you can easily use it to make a good profit from the market, and it's going to work simply in a very straight and straightforward manner. So we'll be handling this with this indicator, our pro entry signal. So this indicator will be looking at the settings, and this is the settings for the indicator. So once you add it to your chart, ensure that you deselect this and deselect the signal so that you can have a good clean chart, because we are not going to be using those on this strategy at this moment. And here, make sure that all the MAs are well checked so that it will be easier for you to have the same exactly what you have here on the chart. And we are using this on 1 minute time frame, because as I mentioned, is a scalping strategy, so we are dealing with a very short time frame for this strategy. So how do we trade with this indicator? So what you do is that you see when you have the green cloud going up, this means that we are currently in an uptrend, and on this graph it means we have already defined our direction because we have the cloud green, and we just need to focus only on buying the market. So, and you can see once you have the green persistent, you know you are in an uptrend. In the same way, when you have the red cloud forming, it means you have transitioned from the uptrend to downtrend. So in that case, you only look for one thing to do in the market, which is to sell the market. So this is how you follow up with the signal. And how do we approach this? So what we do is that we first identify the direction of the market by, at this point, you see that currently the moment you have the green transition to red, it means you have moved from upward to downward trend. And once you have a downward trend, first identify where the downward trend occurred. So this one which occurred at this very particular point. Okay, so we mark this very candle where the signal occurred. The candle where the signal occurred is what we need to take into consideration. So what we need is to have a candle price for the price to close below that particular candle, which gives us the signal. So once we have the price close below it on this very particular point, so this is the point at which you are going to place your pending order. So you place your pending order on the tip of this candle, which gives us the signal. Once it crosses here, it will trigger your trade. And we're considering on this trade, what we do is that we make sure that we have our stop loss at the most recent high. Okay, you will see here, this is the most recent high on this very particular time. So this is where you are going to have your stop loss. So as the market is moving, our target is 1 to 1.5. So if we are risking from this point where we enter the market, okay, if it's 10 pips, so our target should be 15 pips. So this is how we approach this market. We're making this to be very simple and straightforward so that it will be easier for you to capture the market and be able to move ahead. So you see from here, considering the same approach at this very particular point here, you have the market swing from downward trend to an upward trend, so which occurred on this very particular candle. So what we do is that we place here a horizontal line, okay, to define the point at which the market cross. So this very particular time we entered the market here, okay. At the moment price break above, we enter the trade, and this is where the swing low is where we have our stop loss. So on this very particular trade we are taking out. So that is how the market plays out. Sometimes you'll be taken out by the market, but you need to understand, and when you see this very particular point, the market came back again and break above the same level, you re-enter the market. So when the market break above the same level where you formerly place your initial trade, you re-enter the market, and on this very particular second time you will be able to make a very nice profit from the market, as the market is still moving in your direction. Here again you have at this very particular point, you have here the market, okay, change from green to red, which means move from upward trend to downward trend, and on this candle, and you place your horizontal line here and wait for the break, and this did not trigger. We're not triggered on this, so this trade was avoided. Then again you have here the market change again from red cloud to green cloud, so which happens on this very particular candle. So the moment this break, the price breaks above the horizontal line, we enter the market, and here will be our stop loss, will be at this level, because this is the recent swing low for this very particular trade. So, and this time the market move straight in our direction, and we're able to make profit from the market. So looking at the same direction, you see here you have this very particular point, price at this time change from green to red, and here we place our horizontal line, okay, at this point. Then the moment market breaks, the price breaks here, we place our horizontal line here, okay, because this or this level, these are the recent high you have before this trade, and here you see market breaks below, but again comes up, and you have a conflicting signal. So this particular trade, you make a small loss and you exit the market. On this very particular point, this is where we have the signal, and this did not trigger our trade. And here, this very particular point, this is where we have the cross here at this point, and this triggered and returned back. So, and this did not make any impact on our side. You see here again we're following still the same strategy. This is the point where we have the signal was generated, okay, at this point, and we're waiting for price to break above, and here price breaks above, we enter the market, and this is our most recent swing low, so we place our stop loss here, and we continue to maintain. Our target remains 1 to 1.5. So if we are risking at this very particular point here 20 pips, okay, so here we target also to make 45 pips. So we continue with the trade. As we are moving, we continue to move in the direction of the trade. Then you see the market continues to move, and most thing you need to understand is that we also have a strategy to use a trailing stop, our initial target remains 1.5, okay, but we can use a trailing stop to be able to maximize the profit from the market. The lower channel will serve as our opportunity to trail the market and move in the direction of the market. You see from this very particular point here, we have a signal on the market at this point, and the moment this is broken, we enter the trade, and our target for 1 to 1.5 initial target is hit. If we are moving our trailing stop, the moment our target is hit and we see price is reacting, that is the point at which we take our profit. So the same way you will see here, with the same signal, we get here a signal on the market at this very particular point, and here price closed above, we enter the trade, and this is our most recent swing low. This is one thing you need to maintain, and price retrace a little bit and move in our direction. If you are trailing your stop, you just continue to move your trailing stop below this particular point where the channels are giving us the lower part of the channel. And you can see this was a very nice opportunity. Here we have a signal at this point, and this signal was not triggered because price did not close below it. But here we have a signal, and this signal here at this point was triggered here. So the signal was triggered here, and here will be our stop loss. So you see this particular market, the market moved in our direction, and our 1.5 must have been captured. Here we have at this very particular point, this is where we get the signal, and we have the signal here. Okay, you see market retrace and come here and break below. This is where we enter the market, and when we enter the market here, this is where, because the market move in this direction, okay, we're able to capture the profit from the market, because this is the point at which we enter the trade. So we keep moving, and this current live market which will be opening in the next 2 days. So for this week, we'll be targeting to get a continuation of this current signal, but you can as well focus and use the same strategy, because here the moment we get this signal here, we place here the horizontal line, and here price breaks above and we enter the trade, and this is the most recent swing low. So now the market is still in profit, and this is the process how this strategy works. I believe that this is a very simple and straightforward strategy which can be used by anybody, no matter your trading level. And this indicator, you can get it for free. Just the link is there in the description. Just click on it and you'll be able to add this indicator to your chart. This is the trading view indicator, because some don't seem to get the difference between the two. This is a trading view chart, and this indicator is for trading view. It doesn't work for MT4 or MT5. It's only for trading view. So I believe this straightforward. In case if you have any question, you can drop your comments in the comment box below, and I'll be able to clarify for you or give you more insight on how this process works. But the strategy is straightforward. Just use it on 1 hour if you want to use it for swing, but on this we are describing, we are using it on 1 minute, because this is for scalping, and this purely a scalping strategy which I have explained. Thank you for watching.